Hello, everyone. Tony Marlette Jr., Brookside Tax and Financial Group with the July market update. Just a reminder, if you schedule an appointment with us online or via phone, reference this video. Not only will your session with us be at no cost to you, you can also pick up a complimentary copy of one of our books on retirement planning and estate planning as well. There's no getting around it. The markets have been really bad. June 30th ended the worst half of a year in the markets that we've seen since 1970. A lot of this still has to do with inflation. So, a lot of this downward pressure stemming from some of those effects. Furthermore, economic trends are pointing towards a recession. In addition, rising rates are affecting bonds negatively. Stocks have been negative all year, as we've pointed out, but they're also starting to affect home buyers negatively. So not only are home prices rising, which is normal, but also those home buyers who have seen prices come down slightly over the last couple of months, even though they're rising year over year, home buyers are now having to contend with higher monthly mortgage payments as interest rates are beginning to affect that negatively as well. Markets do often reward patient investors who stay the course. So even though we're in a bear market, which is defined as a 20% drop from our most recent high, which we saw in January of this year, they do tend to be painful but quick. We're also dealing with midterm elections later this year, so returns tend to lag in those years also. Remember, as we've talked about before, stocks are less expensive. Valuations are also below their 5 and 10-year averages, and bond yields are up. Remember, yields are not the same as bond returns. Yields are the actual percentage that people live off of. So some of those are the 10-year treasury yields we're seeing north of 3% now. Even investment grade bonds, corporate bonds, are above 4.5% on the yields. So those are not the same as the returns, but still reason for some optimism. Regardless, you want to remember your GST, your goals, strategy, and time frame. A diversified approach does not require perfect timing. A sound financial plan remains the best way for investors to reach their overall financial goals. Of course, if you'd like to meet with us, we'd like to hear from you. Give us a call, visit us online to schedule an appointment. As always, thank you for working with us at Brookside, and we look forward to continuing to work with you.